Bonjour, comment allez-vous?
Bonjour Dr Ken, très bien merci.
Bonjour Dr Ken, merci de nous recevoir aujourd'hui.
Avec plaisir. Stop speaking French.
Okay.
Okay, let's change channels in English, right? Okay. Today, I'm going to welcome two of my friends from France. We've got this guy here, look like Keanu Reeves. His name is Ludovic. It's a noble name, by the way, okay? And we've got Luca here. You look like a technician. Are you a technician?
I am a technician.
You're not, yeah. Okay.
He's a genius behind it.
Yeah, okay. What's happened is there's two guys here. They run a research center. And the actual research centers, they call them Quant 4, okay? Which is a wonderful system. I cannot call them algo, it's a wonderful system. And what's happened is, can I call it, it's a second generation of algo trading.
It's just I think it's totally different. We're one of the first to do it.
You sure?
Yeah. The way we do it.
Yeah, we go way beyond what is conventionally done on the market. Yeah. We do not approach the market the conventional way. What we've been doing is using data as a main pillar for our foundation. The idea behind everything we do is to use genetic evolution as a main principle.
So I mean, I spent a few days with you guys and look at the systems. I know that it's totally different, and you cannot look at a system in a conventional way because this is the algo trading system. This is not exactly, yeah. So can you give me a bit more information? How did you start it, by the way?
So basically, it started 3-4 years ago.
Yeah.
We grew tired of the conventional system that all the normal financial institution would say.
Because both of you are traders.
Yes,
we do trade.
We do trade, investing in trades on the stock market.
Yeah.
And most of the bankers, they will come to you as like, give me your money, I will manage it for you everywhere. Give you 3, 5, maybe 8 if you're lucky % a year.
No guarantee.
Well, they tell you it's guaranteed as long as you don't sell, you don't lose. Most of the time they tell you it's okay, there's no risk.
Yeah.
But matter of fact, every year the next crisis is coming for sure. You might lose 50% of your assets, and it takes 4 to 5, 12 years to come back to the break even.
Right.
So we figured, why not do it ourselves? We will risk 30% every year, but the returns will be way more than 2 or 3%.
Because I mean, the first time when Luca was explaining the system to me, I was a bit confused. But now I'm sort of like, I'm qualified to use it now. Yeah?
You're enlightened.
Yeah, I'm enlightened. Yeah. So to start off, is I've got some slide here. Actually, I'll go through a slide. But before that, let's talk about the thoughts behind it. Like conventional algo, we've got someone got an idea on. Say for example they are trading euro dollars, they got an idea, I'm going to use this indicator, that indicator might be price action to do the trades, and then they work on a strategy, okay, based on the thoughts, and then they execute a strategy, they back test it, okay, and then they optimize it, okay. So you got some people talk about optimization,
yeah,
right?
Exactly. This is where we need to explain the process, the mental process behind creation of algorithm. When an engineer or a developer code a strategy, it's going to make sure it works. So basically, it's going to create over optimization. It's going to tweak the settings. It's going to use a moving average 11 to make it work, and then it's going to try with a moving average 12. It works a little bit better.
Yeah.
And what happens is that it does result in creating what we call curve fitting.
Curve fitting is cheating, isn't it?
Yes, exactly. It's cheating. It's cheating to yourself, basically.
I can't say that it's cheating because everybody's doing it. You're going to upset a lot of people if you're saying it.
Basically, it's called hindsight biased. So you try to explain the past and if you come with a strategy in mind, it's based, of course, on the past. And you hope that it would work on the present, so you curve fit on the present, and you believe it will work on the future. And actually all the strategies, the algo strategies, are done this way. It's just cognitive bias. It would work on the short term, but it's not robust. It's based on faith.
Yeah, and the way, because the other day when Luca was mentioning about the sizing issues, about risk management, and that's interesting too. I mean, conventionally, normally people would sort of like, okay, how much do you want to invest? Say, for example, 100,000. Okay, then okay, what sort of risk do you want to take? They would tell you 30,000.
Yes.
Okay, so it's approximately 30%. So what's happened is with that 30%, okay, conventional algo, they will look at okay, the maximum drawdown, okay, and okay, anything. I mean, I always believe that that I've got to go back to that little story. Yeah, in the 15th century, everybody believed that the world is flat, not round. Okay, if you start telling people that everybody, you are telling people that the world is round, you get locked up. Same thing, because people in those days they refer to bulks, they refer to the top guy. If the top guy is saying the world is flat, then the world is flat. Same thing as of today. Like because conventionally people believe that the maximum drawdown is more than 10% or might be 15%, then your strategy won't work.
Yes, and this is miseducation actually.
Yeah.
It's because the financial industry has been built upon asset under management.
Yeah.
Which Forex is actually a very good tool to allow the trader to not be victimized by that approach, but only use their value at risk as a collateral to their investments.
Yeah, I got you. So your idea is if you are aiming to risk, say 30%, for example, is 30,000. So we use that 30%. 30,000 as the main capital to invest in.
Exactly.
Yes.
So you can look at the maximum drawdown up to say 95%. Because I've seen different algo performance. Some with very bad maximum drawdown figures, but end up they're winning. The performance is overwhelmed those figures.
Yes, exactly. We call that the return to drawdown.
Return to drawdown.
Yes. Looking at drawdown is a double-edged sword.
Say again?
Double-edged sword.
Double-edged swords.
Huh?
The double-edged sword.
Double-edged sword. Okay.
Sword. Like,
get rid of your
like
French accent.
Double-edged katana.
Yeah. Right.
Okay.
One edge of the time.
Then you have to think, and we have to ask you guys. If you only use a $30,000
$30,000 or 30% of $100,000.
What do you do with the remaining of the 70,000?
Sit there. Looks good.
Wealth protection. Buy gold, buy
real estate,
cryptos, buy a car,
flowers for your wife,
buy a handbag, whatever.
I mean, basically, trading is more like gambling anyway. Yeah. So might as well, go for the full bust. Yeah.
Yes.
You could see it this way.
Control your risk.
Yeah.
Embrace your risk.
Yeah.
It's the only way to control it.
I mean, as long as they feel better, okay? Maximum risk, okay, my maximum risk is $30,000, yeah? So, okay, you go, 30,000, you lose it all, doesn't matter, okay?
Yes.
Then you feel good.
If you feel it's like gambling, it's like when you go in casino, you just tell yourself, all right, tonight I will lose, let's say, 3K or 30,000, and have fun with it. But have fun, go for it, have fun.
Yeah.
Play the way you want.
The idea.
And just like, because you will lose, at one point you will double it, and then you will lose again, and double it, and so on. Maybe not double it, maybe just break even.
It doesn't matter. It puts you in the right psychological condition to be successful.
Okay.
Because you're not afraid anymore.
I understand. So now, let me try to explain how it works. I've got some slide here, actually. I'm going to follow. Okay, now, basically, so about a system, step one is the computer create random strategy. Can I call it random strategy?
Yeah.
Okay.
Roughly.
So it's feeding all the indicators, or might be whatever thing indicators into the systems.
Is that data mining?
Data mining, yeah. I use the precise word data mining, yeah. And then they will form a strategy.
Yes.
Multiple strategy. And then
which at that stage the strategy might work or might not work.
Might not work. Then the next stage is with a list of strategy, okay. Then another computer, okay, or another AI system will kill off though it doesn't work.
Yes. It's going to use what we call fitness criteria. So for example, we're going to look for it's going to kill a strategy which has been trading over the last 30 years only 10 times.
So you did mention those are not back tests; those are sample testing, isn't it?
Simulation.
Simulation.
Yeah.
Sorry, simulation.
Because it's based on multiple samples, so it's a good term actually, sample testing, because we use in-sample data, out of sample data, then financial ratios, and then after it goes into one of our workflow. And the workflow is directed by us.
So during a test is going through different sizing, different market,
different time,
various
different time frame,
okay. And various time frames.
So we actually got time frame, so and go through the tests. The strategy you have to go through all these tests in order to survive.
One of these tests, I mean, there's many tests. The stress test, the Monte Carlo test, but
Monte
even
Carlo
the
test,
yeah,
which is like
all the occurrences, all the possible occurrences.
It's like testing 1,000 times the same strategy, by changing some market conditions, some history, randomizing trades, changing the order of the trade, and so on and so on. And then we can assess the worst performance of the strategy. And if the worst performance of the strategy, given all these obstacles we put to it, is still good, then we keep it. Otherwise, we trash it.
And we do the same over time and time and time again. Like one strategy, if we call it this way, has to work over 30 years of time, has to work over 15 years of time, has to work over 30 years of time, and so on.
Step 2, okay. So the strategy go for the killer, okay.
Yes.
Any strategy which is unfit, get rid of it.
We're looking for robustness and consistency.
Even though those are good strategy, one day it will get killed as well.
They die.
Exactly, they just die.
The best strategy will always die, because if you change parameters to it, because of curve fitting we explained before, then they will not go through.
Okay. People might not understand this, but I'll go through all that, because this is what I know. Okay. Then Go strategy we get implanted to the robots, another computer, and the robot will be using Go strategy to trade.
Yes.
Okay, it's non-stop, keep on trading. At the same time, while they're trading, you're testing.
Yes.
You monitor the performance.
Yeah,
right?
they're generating trades, buy and sell, buy and sell,
and
buy and sell.
And at the same time, on the other end, the AI is creating more strategy to it. Yeah. Okay, it's keep on feeding to the robots.
Today, there's some new strategies that are being tested
to the robots,
to the computer.
We're just grinding.
So your edges, you have been doing 3 years ahead or 4 years ahead from people, so no one can catch you up basically.
And we also have the computation power in order to do that. Yeah. Most people at their house cannot do it.
Yeah. Okay, so tell me about
huge servers.
So why is it so powerful?
It's part of our secret recipe.
Yeah, I was going to say.
It's something like as powerful as a NASA computer, right?
I don't know if they're as powerful.
Yeah, exactly. I don't know if they're as powerful as us.
It's good, it's powerful.
Yeah.
So then step 4, next stage would be because I know that in there, because Min, he got a Chinese wife. So we're using some Chinese terms like yin yang. So we look at the bits there, so we got two group of robots. One is trading yin, and the other group is trading yang. So both are opposite.
Yes.
Kind of opposite.
I'm not saying that it's like one is buying up, one is selling, because one group robot would be buy, sell, and the other group will be buy, sell, but they're doing exactly opposite.
Yes. One is the hedged version of the other one.
Right. Okay.
So the yang, when the yin plays a buy, the yang plays a sell.
Right. Okay.
But it's always pending orders.
So basically, but people say, what are you talking about? Why do you have to have two set of two group of robots trading the other opposite? Yeah. So they'll be trading on different instrument. Okay. Gold, euro, dollars, dollar, yen, everything. Yeah.
So and each signal basically is a derivative. It's diversified on the forex. So you will never trade one pair, which is risky. Yeah. We try to create an ETF on the forex, many ETFs. So every signal, every robot would trade different pairs at the same time.
So basically, a robot is continuous trading, non-stop
on different pairs.
It's just a matter of you want to engage. Could you use this word? Yeah.
Exactly.
Or disengage.
Exactly.
Yes.
From the activities.
Yes.
You want to follow or unfollow what the robot is doing.
Yeah. Okay.
Is robots offering you the best opportunity now, later, yesterday, tomorrow, the month later. And this is what traders need to assess.
So the traders, all I have to do is look at the sizings. Okay, they've got a wonderful sort of like layout for the sizing. You know, how much you want to risk. You know, how do you want to risk?
That's the risk management for
risk
sure.
management, yeah. Risk control. This is all they have to set. Okay.
Yes, these settings are what makes our listeners the traders. This is what defines trading. It's controlling risk.
Right.
If you don't control risk, you cannot generate profits.
And not just that, but the computer, the AI can help. If you don't want to set it yourself, the AI will do it for you as well.
Exactly.
Yeah. Every single order that goes through to the markets has a stop loss.
Right.
We are talking about automated trading. A robot can do it. The psychological mindset of the trader in the manual way of operating might not be able to do it consistently. Whereas a robot can do it. So we just take advantage of the psychological aspect of artificial intelligence.
There's no emotion in a robot.
It's more like machine learning.
It is.
Or AI is a bit different.
It's just what
in between.
Yes.
Can you say that?
Exactly.
No, it's just like what we do, what we use, the principle we use, are what the AI and machine learning are using to exist.
Right. Okay.
Genetic evolution.
And finally, this is the bit I find it the most interesting bit. You know, is picking the right robot to act.
Yes.
So, I mean, I've been a trader for such a long time, for a while. I can't say this such a long time. And we look at chart, and what we normally do is look at the price on it. Because I'm a price action guy, yes, look at the price.
We've looked at your site.
What is interesting is the chart that you are providing is not price. It's just you're trading the robot's performance.
The equity.
Yes. Indeed, yes.
So in the morning, so you look at, okay, this robot is doing well, okay. This robot is sort of like, you know, not doing that well, okay. It's a bit like in price action we call it second entries. It's like, okay, the trend is going up and then it's actually heading down. Okay, now it's the right time to actually buy.
Buy cheap, sell expensive.
So it's like, so the procedure is like, I'm not trading the price. I'm trading the robot performance.
Exactly.
And the robot is trading the strategy, and the strategy is trading the price.
Yes.
Am I correct? I got it, yeah?
Spot on.
Smart.
Spot on.
Am I?
Smart.
Yeah.
Top shit.
Top shit, yeah.
So the thing is, we wanted to empower the traders, know what they're doing and why they're doing it. This is why we have the risk control. This is why we have all the signals like the Kanachi, the MACD, the RSI, and so on. Because using these tools, they know. So the robots, whatever happens, because they're robust and consistent, over time they will always win money. Maybe 1%, 2%, 5%, always going up.
Yeah.
But at the same times, the market always goes up and down, up and down, up and down. So we're teaching the traders using 15, 20 minutes a day just to grab the from when it's down
so
to
like,
go
like
up.
the bits about like there now.
Exactly.
Like, you know, you look at the
That's exactly
the chart. Okay, you look at a chart. Okay, and then after you look at a chart, you select the robot. Which robot? You can select more than one robot. Yeah, and each robot consists of a lot of strategy. Each robot work on a lot of strategy. Okay, and it was just buying and selling, trade different time.
Go for the return to the mean.
So the interesting thing is about like when I look at a chart, the system chart. It's not price, so basically there isn't any time there. There isn't any 240 or 1 day. Daily. It's not daily chart 240. You just zoom in, zoom out. You look at it from a helicopter view and then zoom out and then zoom in and look at the retracement.
It's a quant approach.
Quant approach. Yeah, I know you're a quant guy. Yeah. So
Chicago Booth School of Business. That's cool.
Quant guy. Yeah. So basically, retracement, just like what we normally do, we only buy at the retracement, okay, as a price action guy myself. Well, sometimes, okay, there are some exceptions, like I buy at bricks out, okay, but most of the time you try to buy at a better price.
Yeah.
Okay, but on this is I cannot say buy or sell, you engage.
Yes,
okay,
you engage.
Exactly.
Not at the peak performance of a robot. At the worst,
at the worst, at the movement when it
retracement of the performance.
Yes, which is very similar to price action when you actually phase the trend in the direction of the trend. The logic is similar. So what you're actually doing is engaging when it's cheaper.
When it's not performing that good, when they're having a rest.
When
When they're having a rest,
exactly.
when they're having a rest.
After
this is how I
breakfast.
normally teach my students. Okay, look at the momentum, how good they are, you know. Are they still got the momentum to heading up, you know? Okay, when having a rest, get in, yeah? Same thing.
The same way the market is following a cycle,
Yeah.
the performance of the robots are following a cycle as well.
Yeah.
So it's simple.
Yeah.
When the performance of the cycle, when the performance cycle is down, then you engage. If you engage when the performance is high, what's going to happen? It's going to go down. So that makes sense to then enter when it's down because it's going to go up.
I think people got to try it. You got to look at it first, you know, and they got. It's not something. If you're an algo trader, then when you look at this system, you won't understand. You got to look at it from different angles. I mean,
it's fairly easy to use.
Yes, but one thing to explain also behind is that when an algo trader is trading, he's trading one algo, maybe two algos. What's our audience?
Combinations of algo.
Yeah, what our audience is actually looking at is a renewed combination of more than 300 strategies, 300 algos behind. It's a huge difference in terms of processing power, in terms of opening to the market.
Understand.
What these algos do is not shooting for the stars. No, it's being consistent, robust.
And like this is a chart, you know, I was just talking about. This is a chart for like looking at the rope performance, and there is no price. They got time. There's only got like equities.
Right.
We can see three levels: the equity, the performance equity of the robots, the MACD, where you can see the divergence on the moving averages, and the RSI, which tells you if the price is expensive or cheap.
Yeah, it's good. Yeah.
Then you get the Heikenhachi.
So that is the work of the robot performance. Okay, let's chart that robot performance. And one side is the equity. That's equity.
So you see it's going up.
Yeah.
Over time, you're looking at 3 years of data.
Yeah, and the
over time.
and the period. Yeah. So and every day, as you say, spend 15 minutes and look at the performance of the robot.
That's it.
Whether you like them, if you like them, press the button, engage.
Yes.
Okay. If you are not good enough, I mean, you need some kind of like technical analysis background in order to look at the performance, right? If you are not, there are traders will be helping us to decide.
Yes. That's
to do it for you. Yes.
What happens is per robot, per signal, there's just 4 indicators to look for, really.
Yeah.
As soon as the 4 indicators are there, just go for it. If only 3 are there, make your decision.
What we're going to do is show you an example a bit later. We have a slide explaining a bit some examples that we can go through. This is how we like to talk about us. Okay, the boss is here. Okay, we have 1,000 robots. We have 300 trading consistently. We have 1,000 and more being generated every day. That's the big boss. He's the one. He's the one.
He's the CEO.
Yeah,
right, okay.
He's the boss. Okay.
So everything there is no human involved. The computer, the supercomputer is writing a strategy. The strategy is being tested by another computer, and then once the strategy, any of the strategy is good enough, they survive. They survive, get installed to the robot, okay, and the human is only trading. Okay, this robot is good. Okay, let's trade it. Let's engage.
Exactly.
Yeah, that's the story. And if you can't wait, if I'm going to trade a yin robot, if I can't wait, if I cannot wait,
you go for the yang.
Go to yang because it's exactly opposite. Yeah.
Exactly. Yeah. So all we have to do is succession of steps as a client. Okay.
Yeah.
First is to select your broker.
Yeah.
So Ken, you're very good advice for that.
Yeah.
You work with a very, very good broker.
Yeah.
That we actually are very fond of as well because their liquidity works fantastically with algo trading and quantitative systems.
Yeah.
So it's something you can go full speed with them. It's no problem with our system.
Persistence.
Then after you have to choose a signal. So if you remember the trading wall, you can choose one or many signal or none.
Not signal. Choosing the robots. Robot have signals.
Yes.
Have many, not just one signal, but multiple signals for robot. Because unlike algo is okay, like EA, okay, expert advisors. whenever a signal comes, you just make one trade.
Right.
Well, that is slightly different. There's many signals with many trades. The minute when you press the engage button, okay,
everything
then you're doing like multiple trades, yeah?
It's like the rated robot, we call it a signal, but the robot trader select by color, red, blue, orange, and so on. And whatever he will do, you will do it on your account without you having to do nothing.
Okay.
But now you guys, you listen to us very carefully. The third step is what defines you as a trader, okay? Managing risk.
Yeah,
profits take care of themselves,
exactly.
You know.
Always,
You have to manage your risk.
There's always talk about, like, to my students about like what is a stop loss. Some people tell me how many pips. Some people tell me how much they can afford. No. Some people tell me, okay, this is a previous high. I would tell them your stop loss is how much money in your pocket.
Exactly. Yes. Yeah. And it goes back to what you were explaining, and what we actually agree on is that okay, you have 100,000. You're willing to risk 30%.
That's how much money in your
Put
pocket.
30,000.
Comfortably.
You know?
Exactly.
Put 30,000 and just leverage up. You know.
Yeah.
And that's one of the benefits of trading forex. So let's enjoy it. Then after it's simple. Okay, we say click follow, you know, but it's what you say
it's
engage.
Exactly follow is engage.
Engage, yeah.
Change that button to engage.
Exactly.
Follow, people thought it's just like NQL5, you know, EA, engage.
Engage, yeah. That's exactly. It's a very strong act, which is valid only if first you control your risk. It's all about risk.
I think we come from risk management.
Should we have a rest and then come back in a minute?
Yeah, it's okay because number 5 was just relax, you know.
Okay.
So we just relax, you know.
Just relax. We should relax.
That's all we have to do now. Just relax. So, because you set up your risk, you engaged. What do you have to do now? Finish your coffee, go to work.
15 minutes every day.
Yep.
Or might be, no, not every day. It's every day. 1 or 2 days. Yeah. Because,
no, do it every day.
Okay.
Because like, from one day to the other, maybe another signal will start to be good.
Yeah, understand.
And so it would be a lack of opportunity.
And what happened is that the first day you look at all the signals, but then some are way off. It's not going to happen for a month or two, you know. So then the second day you're going to look at less signals, and then after you're just going to look at 2 or 3 signals at a time. That's it, you know.
Right. Okay.
So then it gets simpler and simpler once you are.
Slide?
And no, we have research that we talked about before. Research is creating new knowledge. It's a brief sum up of what we do. Power, a lot of cores, a lot of processing power, then an interface for the user.
Right.
So we do everything from the creation up to the dealing of the orders.
Right.
I would go back on the research is creating new knowledge, that is definite. But what we do by that is create a new way of trading. A new culture of trading.
New culture.
Because most traders, especially the day traders, they spend all their time on their phones. My wife is a DAX trader. All the time on the computer, looking at it, trying to scalp it.
12 o'clock at night.
Exactly. And during the day, we don't have time to do it. So it's a new way of doing it with a peace of mind that we don't really have as a trader.
So
there's a lot of emotions.
So far, I mean, because I'm using it. What's the performance? I mean,
it depends how you trade.
Yeah, it depends how you trade. I mean, we have very, very, very aggressive traders doing huge performance, and we have very calm traders, you know, not exposing themselves so much, trading very little. As far as we are concerned, our trading style is that we off market.
We're snipers.
Yeah, we are snipers.
You can snipe in, you can be aggressive, you can snipe in is, you've got to spend 15 minutes in the morning, check the performance robot, and then snipe in.
I want to show how we snipe in.
Okay.
Yeah.
Okay, I want to show an example of...
I'm one of the worst snipers because I only trade 6 weeks a year. I only wait for the right time, then just follow it for 1 or 2 weeks, then go out. Then wait for another window. Boom, go in.
I mean, I used to be a day trader, and then I changed myself to be a swing trader, and then now I'm a lazy trader.
Right.
So
it would be perfect for
all
you.
the time is like, you know, this is how you progress.
Yes.
Before it's every day, you know,
Exactly.
8 hours a day is look at the monitor, and you better
job.
work for 7-Eleven because, you know, if you divide the time that you're working on the computer, then become a swing traders. And now I don't care. As long as the sizing is good enough, then you can relax, basically. And with this, it's a lot easier. 15 minutes a day,
Yeah.
That's it.
Maybe you wanna talk about that.
You have to learn the rule of the game, and then you have to play better than anyone else.
Yeah, it's exactly our promise to the people.
Yeah.
Is that they can go for fun. Some people just trade for fun,
Yeah.
They can do it with us.
My mentor's called is hobbyist. Hobbyist. Yeah, because some people do. I'm a hobbyist now instead of like a serious trader. I'm a hobbyist now.
Yeah, and some people just trade for money. Yeah. Some people trade for psychological reward, instant gratification. Yeah. Some people trade instead of gambling. Everybody's got a different mindset, and we respect that.
Yeah.
And they can find it through our system. Some of our traders are actually trading a lot of volume every day. Trading a lot, going up, going down, going up, but they're enjoying the recovery. And they're having fun. And that's what they tell us.
Yeah.
We are having fun.
It's the journey.
And this is cool. But maybe to sum up. Most of the complex things we talked about. These are the 3 pillars. Intelligence, okay?
It is. It's quite smart. I'm really impressed about, this guy can sort of implement in this kind of systems. Yeah, he doesn't look like one of these geniuses, but
we sell intelligence, and we don't have a sample with us.
Exactly.
So risk management. Risk
Yeah.
management, that's a key part, guys.
The risk is managed by the trader themselves, or
so both. Basically, if they don't risk it, if they don't manage their risk, the traders, the robots, will manage it for them.
Yeah.
But it's always better to size your position.
So what's the success rate on that? The robot is managing the risk.
It's fairly consistent. Every single trade that goes with a stop loss.
Right.
So nothing can go wrong, which means that where you can get an edge by doing good and proper risk management. It gives you an additional edge to it, So there are many ways to manage risk. Some people like to do fixed lots. Some people like to risk fixed lots. Lot size is fixed.
Fixed lot.
And some other people actually prefer to make variable sizing depending on their equity, So that there isn't one way of doing it. There are wrong ways of doing it, certainly, and there are ways to give you an edge. Some people, for example, trade all the time, follow all the signals, but they change only the position sizing.
You cannot avoid, because once you engage, then whatever the robot providing a signal, you've got to trade.
Yes,
exactly.
So you mean trading on a signal is that leave it running non-stop, like that, instead of like disengage, right?
Yep.
And some traders just change the position sizing.
Right.
So when a signal is bad, they trade a micro lot. When a signal is good, they trade a mini lot.
Right. Okay.
That's what they do. So there's many ways. There's not one right way of doing it.
So what's the final one? The robustness.
Robustness is the way they were built. They were built to be robust.
But I find that, even though I cannot say that it is a simple system to use, I reckon, you need someone to guide you through. Like if you give me a system without anyone telling me what that is, because it's not conventional.
We explain everything in our blogs.
Yes, if you click on the web tour, or you click on the video tutorial, or you read the manual, you should be fine.
But you've got to be open in mind, because the stuff in there is like reversing the conventional thinking, isn't it?
Okay, but it's good because the people listening to us right now are open-minded. They want to learn, they want to perform.
Yeah, but the thing is, they might not understand your French accent.
Hey, we have a certain je ne sais quoi.
We have the savoir-faire.
And we have the savoir-faire. So this is key in trading, okay? Experienced traders know that being off market is what makes you win. Okay, it's not trading that makes you.
That's what we do.
Not trading.
We don't trade.
Yeah, not trading is trading. Being off market is a decision.
Yeah, I understand that, because my ex-wife rang me up and I said, oh, my son is doing quite well this year on his studying. And I said, thank you very much. And then she said, oh, I didn't spend much time with him. I didn't actually interfere with whatever you want to do. I said, no teaching is teaching. Yeah. If you're interfering with the kids, then it might
switch
go the other way around. Yeah.
Right.
So same thing is trading is like you got to sometimes put a stop.
That is what we do actually with the signals. We teach our traders to know when to fight, when to engage, and when to pull out.
But they still need something for manual traders or for training the robot. They still have to understand how to reading technical analysis.
Everything is explained.
I'm going to show an example now. Yeah. So here we got the signal wall. Okay, we have 29 signals to choose from.
29 robots.
Yes,
29 robots.
Robots. Yeah, to engage or not.
Yin, yang, and curves.
If we actually click on the charts that you see here, it's going to open more data. So then you have trading performance that you can analyze from the signal. And let's say we can see this one is a signal that you can see here. You can see the performance, you can see the MACD, and you can see the RSI.
The MACD of the performance.
Exactly.
For the price.
Yes. Exactly.
Performance of the
robots.
It's not a price, it's a performance gauge.
Yes.
Okay, it's not price. This is not price.
It's just like what the robot trader is doing.
So when you look at the MACD, so I circled in red interesting things is that whenever the divergence of the moving average is actually amplifying, it shows that you have an acceleration. If it's getting faster,
acceleration of performance.
Yes.
Exactly.
Not acceleration for the momentum of the price.
Exactly, of the performance. So what does it tell you?
Go for it. Engage.
It tells you.
It takes you one indicator.
Yes, it tells you. Yes, this starts smelling very good. You know.
Starts smelling. What's cooking?
Yeah, exactly. Yeah, getting hungry now. You know.
Yeah.
So the appetite is there. So let's see what's on the menu now. Okay, and then we go to a Heiken and Ashi.
Right.
Okay.
That's the final decisions.
Yes.
Exactly. Yes. When to enter. So when you're a trader, you look at is it
most
the right?
traders understand Hakanashi.
Yeah, of course. Yeah. And what happens is that when you trade, is it the right time to enter? So you look normally, let's say on a
confirmation.
Exactly. And then you look for your entry point. So for example, let's say you look on a 4 hours chart. Is the trend going up? Okay, I'm going to look for a long setup. Then you zoom on your 15 minutes charts and you look for a price pattern that confirms that you're on a retracement, for example. And then you engage. You place a long buy. It's exactly what you can do too. You know? So let's say, okay, the MACD is positive. Okay. Smelling good, you know? Heiken Ashi is orange now. The last day, Heiken Ashi is orange. What do you do?
I just follow,
engage. As simple as that, you know?
Yeah, sort of looks simple, but the concept behind it, you still have to
The thing is,
you gotta have an open mind to learn the systems, alright?
And you have to trust.
We took care of the complicated part before by creating the robots.
After you sort of like trying to explain the system. We spend 30 minutes explaining
15 minutes
stuff,
is enough.
But still, a lot of people still find it. What is it all about?
Every new client, they receive the secret recipe on how to trade these.
The thing is that it's something that took us more than 3 years to develop. It's normal that people cannot understand all of it in 10 minutes or 15 minutes. It makes sense. It's a complex things behind.
All right.
Good thing is they don't need to understand the complex things behind.
And I'd like to come to a word you see here: patience. Okay, patience, sniping.
Yep.
Waiting, being off market, risk management. All these things is what makes our successful trader so successful. Okay, I want to finish with a quote from Warren Buffett. Please.
You gonna read it?
Oops.
You gonna read it?
Successful investing take time.
Okay. Do you want me to read it?
Yeah. Of
Can
course,
I speak better English for Chinaman?
You can try.
Successful investing take time. Discipline and patience, no matter how great the talent or effort, something just take time. You can't produce a baby in 1 month. The cats can, okay? But getting 9 women pregnant.
Okay. So no matter what you do in trading, it's about time.
Time, patience, commitments, discipline.
Snipe.
There is no shortcut to success. It's hard work.
When I was in the army, I could have been a sniper. Do you know why I can't? Because I've got no patience. Anyway, thanks for the time.
Pleasure.
Pleasure. Thank you, Dr. Ken.
Okay. Thank you very much. Cheers.
Cheers.